This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago. We're looking at the grain markets, mostly consolidating across the board: corn, soybeans, and wheat. Kind of taking a little bit of a breather after the recent pressure we've seen in the market, but don't let that fool you. The option premiums are actually increasing on both the puts and the calls when you look at some of these markets, specifically corn. So the market's looking for a bigger move in either direction as we head towards next week's planting intentions report. For May futures, we're looking at key technical resistance, 378 and 3/4, 200-day moving average, but more significantly above that, 382 to 383. Fibonacci retracement as well as a gap. If the bulls are able to get out above this, I think the funds step back in and extend their net long position. Keep in mind, again, plantings report next week. Weather problems in D.C. push exports to tomorrow morning, so something to keep an eye on there. Now, as far as the soybeans are concerned, we're a lot less optimistic, as we have been for a long time. We've been making lower highs and lower lows, and I think these relief rallies are meant to be sold. 1038 and a quarter to 1041 and 3/4 is key resistance. We want to see remain intact. If we're able to see that, I think we retest the bottom end of support. 1016, 1021 and 3/4 gives us a breakdown to 1006 and a half to 1009 and 3/4, which is a key retracement, as well as a 100-day moving average. Wrapping things up with some of the wheat technicals, we're keeping a close eye on. Same type of thing with the soybeans, lower highs and lower lows until the bulls can get a close out above 466 and a half to 467 and 3/4. The bears remain in control. A conviction close below that psychologically significant 450 level opens the door to contract lows near 423 to 427. It's been Oliver Slope with Blue Line Futures from the floor of the CME.